Hi guys, this is Hector. Today's the 1st of October 2007. It's 2:30 p.m. London time, and I've just triggered a short entry on the euro against the Australian dollar based on a setup of on the 1 hour time frame. As I was telling the guys this morning on my mailing list, I was basically looking to try this currency pair because we have a clear nice downtrending scenario. Okay, as you can see right now on my screen, with all those moving averages nicely pointing down parallel to each other, etc., etc. So I was just basically waiting for a pullback in order to search for a short opportunity on this currency pair. Actually, I was waiting for the 160.20 level to hold the retracement, which is the previous swing low. Okay, we have also the 38% Fibonacci retracement right there, and well, basically it seemed like to me like the either this level, the like I say, the 160.20 or the 160.25, few pips above, being this previous swing low. It seemed like the optimal place to me for to search for a bounce to the downside in the direction of the main trend. Nonetheless, we've had for all of you who've been following the markets today, especially the euro pairs, you've probably noticed a very clear, very obvious and quite massive actually spike in the charts. In this case, in the euro against the Australian dollar, we had a 100 pip spike. Okay, actually have a look here. This is the 1 hour time frame, and please notice this large green bar on my chart, okay, which has been like I say, basically a 100 pip bar from here to here. There is the strange thing about this spike is that we didn't get any news announcement at that precise time, okay, or at least they were non-scheduled on my economical calendar, and well, it was rather surprising. Actually, a couple of my students sent me an email, asking me whether I knew what was going on at that precise time, and well, I basically answered the truth. I don't know why we've spiked 100 pip within the hour. Okay, that's definitely not normal. But nonetheless, what I like about this setup is how price, despite having overshot about 20 pips the optimum area, or the area was I had my sound alarms basically focused on, okay, which was a few pips about before hitting that level. What I'm liking about this setup is that price has not breached the dynamic area of support. As you can see, it's found resistance, the dynamic area of resistance, alright? It's found resistance of it, okay, also the 160.50 round number. So perhaps it has been this long wick here. You see that this wick here, that's probably been a stop loss hand by any large institutional player. This was a very obvious level to place a stop. Okay, so perhaps someone wanted to shake the weaker fishes out of the pond. Okay, it's pushed price to the upside. Knocking many stop losses around here, okay, and reloading short on this currency pair at better prices of those people being stopped out. All right, here, anywhere here. Okay, there were plenty of stop losses, and like I said, someone is been reloading short on this currency pair of those poor people who've been stopped out on the off this trade. All right. Okay, my signal came on the 15-minute chart, which is the one that you are seeing right now. I'm basically seeing a reversal formation, price moving up to the dynamic area of support in the 1 hour time frame. Right now you are now seeing the 15 minutes time frame, which is my trigger chart in this case. Then it forms a 1 2 3 reversal formation. Okay, I hope you guys can see that in my screen, the 1 2 3 reversal formation of an area of resistance. All right, like I said, dynamic area of resistance comes around there, and as I placed my sell stop order a few pips below the 160.00 round number, the exit level. As usual, I like to place my entries and my exits around the round numbers, a few pips above or below, depending on what side on of the trade I'm taking. Okay, whether long or short. In this case, since I wanted to go short, I like to place my. It's a personal procedure of mine, a personal habit to place my seller stop, therefore my entry, few pips. Below the round number. Okay, so upon having spotted the 1 2 3 reversal formation of the dynamic area of resistance, I've basically my entry should have been there, but actually I mean meaning right there, but I stretched it few pips below that level, in order to make sure that the round number was breached. Okay, so entry price 159.95, stop loss above this second pullback. Okay, at 160.28. I will take half of my position out as usual at the previous swing low at 159.60, and then I'm shooting on the second half of the trade for the next round number, a few pips above as usual. If you guys have been following my videos throughout the last few months, you know that I like to exit few pips above or below the round numbers. Okay, so my final target is 159.05. I've reduced the my usual lot size on this trade because of this, like I said, this long retracement bar. Okay, I was mentioning about before. I like to try harmonic swinging formations. However, in this case, if we go back into the 15-minute chart, we can see that clear enormous spike to the upside, and that has kind of chickened me out, okay, a little bit. So I'm not gonna risk as much as I usually do on my trade. Okay, on this trade, on this particular trade, I've decided to trade smaller lots, okay, than usual. Alright guys, that's all. I'll keep you updated whatever happens. Okay, bye bye. Hi guys, this is Hector again. It's 20 minutes past 4 p.m. London time. Just a quick update to let you know that I've closed out half of my position at plus 30 pips, alright, on this trade that I had open on the euro against the Australian dollar, and I've moved the stop to break even from I've trailed my stop from here down to break even levels. Alright, hi guys, this is Hector. One final update to let you know that well, my system has just the alarm has just rung off, basically letting me know that my final target has been met at plus 85 pips on the second half of the trade. If you remember, I took half of my position out here for plus 30, and well, basically recapping a little bit, I was basically following this downtrend, as you can see on my screen right now. Yesterday, well, basically throughout the Tokyo session, last night Tokyo session, we broke the previous support level right there at 160.20. I was waiting to for a retrace back to resistance levels in order to enter short again on this downtrend. I was actually hoping for the 160.20 level to hold the retracement. It quite didn't happen. Okay, we had the previous swing low and the 38% Fibonacci level. In fact, it breached through until the next level of resistance, where we had the round number 160.50 and the 50% Fibonacci retracement, and of course the dynamic area of resistance. Like I said, my plan it was basically entering short at this level, but well, it breached through up here, but nonetheless it was just one quick breach up, probably a little bit of stop loss hunting by large players, and as soon as I saw a price rebounding down, I zoomed into the 15-minute chart in order to search for a reversal formation, okay, which we got in the shape of a 1, 2, 3 formation, which is explained, I think, in the chapter number 3 in my course. And finally, I placed my sell stop order a few pips below the 160 round number. The 159.95 to be exact was my entry level. Alright guys, that's all. Plus 30 pips on the first half of the trade, plus 85 on the second half of the trade. That's all for today, and I'll be seeing you tomorrow on the website. Bye bye.